Okay, so now we are going to discuss the case scenario on budgets and budgetary control. Another very important chapter, interesting chapter, sir. In every chapter you are saying important, yes, because from the examination point of view, each and every chapter is going to be important, right? So before we proceed, please do not forget to subscribe to this channel because you are going to get lots and lots of useful content on this channel, the free lectures of cost accounting, financial management, and the ultimate conceptual clarity that you will be getting on this channel. So please do not forget to subscribe, press the bell icon and share with all your friends. Okay, let's get going with the budget and budgetary control case scenario. M Limited is a public sector undertaking, produces a product A. Okay, so this product A is what? This is your finished good. The company is in the process of preparing its revenue budget for the year 2024. Basically, revenue budget will tell you what, sir, what will be your sales, what will be your cost, what will be the ultimate profit or the loss that the company is anticipating. The company has the following information which can be useful in preparing the budget. It is anticipated 12% growth in the sales volume from the year 2023 of 4,20,000 tons. So basically this budget is being prepared for 2 years, that is 2023 and 2024. Right. So first they are talking about, now when they are saying revenue budget, that means we'll be focusing on the sales minus will be focusing on certain cost and we'll try to find out what is the profit or the ultimate loss to the company. This is what the revenue budget says, right? So what are the sales given? If you talk about the sales volume, that means the sales quantity in 2023, it was, now if I write here sales quantity here, it was 4,20,000 and the anticipated growth is how much? 12%. So they are expecting 12% increase in it, that is 4,70,400 will be the sales quantity. Okay. Now they say the sales price of rupees 23,000 per ton will be increased by 10% provided the wholesale price index increases by 5%. So this increase is conditional. It is not compulsory that it will be increasing by 10%. They say it will increase by 10% if. So it is a conditional increase. If this WPI increases by 5%. Okay, so we'll have to wait to see what is the increase in the WPI. Next, to produce 1 ton of product A, 2.3 tons of the raw material are required. The raw material cost are 4,500 per ton. The price of the raw material will also increase by 10% if WIP increases by 5%. Again, the increase in the price of the raw material is again conditional dependent upon the WPI. That if WPI increases by 5%, only then the sale price will increase by 10% and this raw material price will also increase by 10%. Fine, sir. Now see the fourth point, very important. They say the projected increase in the WPI is 4%, not 5%. Now tell me whether this 10% is relevant, whether you will increase the selling price by 10%. No, sir. Now this becomes irrelevant because the WPI is not increasing by 5%. Right? So the increase in the selling price as well as the price of raw material was conditional. So here, if sales quantity you are having, what will be the selling price? What will be the selling price here? The selling price will be 23,000 only, sir. Right? It will be 23,000. Now the value is going to be large. So what we'll do is we'll take rupees in lakhs. To make it simplified, we will take rupees in lakhs. So what will be your sales volume? What will be your sales volume? That will come to 96,600. In lakhs we are taking, right? In lakhs we are taking. Please be very careful with this. This comes to 1,08,192. This is your sales volume that we have got. Okay, so I'll highlight this sales volume part. This is one part that we have got. Now coming to the raw material, coming to this part. So I have dealt with this part, this part, this part. Now coming to the third part, they say to manufacture 1 ton of product A, 2.3 tons of the raw material will be required. Okay, the raw material cost is 4500 per ton. The price of the raw material increase is irrelevant now. Let's talk about raw material now. Sales we are done with. Now let's talk about raw material. Now what is the information regarding raw material? First we'll see how much quantity of the raw material will be required. Right? So first I'll write here quantity required. What is the quantity required? That is 2.3 ton for every 1 ton of product A. Here the quantity is 4,20,000. So multiplied by 2.3, and here it is 4,70,400 multiplied by 2.3. That comes to 9,66,000, and 4,70,400 multiplied by 2.3, that comes to 10,81,920. Now this is what? This is the quantity, not the value. Now what is the rate? What is the price here? What is the price here? What is the price given? That is 4,500 per ton. So multiplied by 4,500 multiplied by 4,500. So we will get here what? The material cost. So what will be your material cost? Right, that is in rupee terms. Again we are going to take rupees in lakhs because the value is going to be quite big value, right? So what I'll take here, 9,66,000 multiplied by, so that comes to 43,470, 43,470, and 10,81,920 multiplied by 4,500, that comes to 48,686, 48,686.4. So this is what you are getting here with the raw material part. Okay, so I'll highlight whatever the rupee term values are. I'm going to highlight sales volume minus the material cost. Come to the next point. Let's see the next point now. A total of 6,000 employees work for the company. The company works for 26 days in a month. Okay. 85% of the employees of the company are permanent and getting a salary as per the 5-year wage agreement. So out of this, they say 85% is your permanent, they are your permanent employees. Right. So what is 85%? That is 5,100 are your permanent employees. The remaining 15%, that will be your temporary employees. Yes. The remaining 15%, that is 900, they will be your temporary employees. Now, what is the information given regarding this 85% permanent employees? They say they are getting a salary as per the 5-year wage agreement. The earnings per man shift means employee cost for a shift of 8 hours is 3,000 rupees excluding the terminal benefits. That is for 1 day. 1 day, 8 hours, we are paying 3,000 rupees. Okay. The new wage agreement will be implemented from 1st of July 2024, and it is expected a 15% increase in the pay will be given to them. Okay, sir, fine. In the coming year, right? Further, the casual employees are getting a daily wage of 850. So for the temporary, they have used the word here casual employees. Okay. They are getting a daily wages of 850. The wages is linked to the consumer price index. The present CPI is 165.17 points and it is expected to be 173.59 points in the year 2024. That is the next year. How can we calculate now? Sir, if the CPI is 165.17, the daily wages are 850. In the next year, we are expecting that this CPI will be 173.59. So according to this, 850 divided by 165.17 multiplied by 173.59. So it will come out to 893.33. So this will be the daily wage rate. Clear? Okay. So let's talk about this labor cost now. Let's talk about this labor cost. Material cost we have already talked about. Let's talk about the labor cost now. Labor cost. In the labor cost, we have two types of labor. One is your permanent labor. One is our permanent labor. What is the given regarding permanent labor? Now, in the year 2023, how they are being paid? How they are being paid? How many workers are there? 5,100 workers are there. For one day of 8 hours, what is the salary that they are getting? That is 3,000. Multiplied by, this is for one day. They are working for 26 days in a month. Multiplied by, we have 12 months in a year because we want annual cost. So 5,100 multiplied by 3,000 multiplied by 26 multiplied by 12 divided by 1 lakh. That comes to 47,736 because we are taking rupees in lakhs. Clear with this? Okay. In the second part, now in the next year, what they are saying? They are saying that we are anticipating that from July, these wages will get revised, right? For the year 2024, that means, see, they are talking about 1 year, either 2023, then 2024. That means they are talking from 1st of January to 31st of December. Right? Otherwise, how they write? If it is from April to March, they will write 2023-24, 2024-25. But here they are writing 2023 only. They are writing 2024 only. That means they are talking about what? The financial year, this from January to December. Clear? Fine, sir. Now they say the wages are going to increase from what? From 1st of July. That means for the first 6 months, you are going to pay according to 3,000 and after that it will change. Okay. So how you will take here? You will take 5,100 employees, 3,000 every day, 26 days in a month multiplied by 6 months plus 5,100 employees. Now how much they will get? 15% increase. That is, they'll get here 3,450, 26 days in a month and 6 months. Right? This is what we have to take here. So what the value you will get here is 51316.2. This is the value that you will get for the permanent workers. Is that clear? Okay, so next we have casual workers. Next we have casual workers. How many workers are there, sir? 900 workers are there. For one day, how much you are paying? They say the daily wage rate of 850 rupees. Fine. So multiplied by 850 multiplied by 26 days multiplied by 12. Right? So this will come to 2386.8. This will come to 2386.8. Right? Now, on the other hand, 900 workers, now what will be the daily wage rate? This will be the daily wage rate. Now, this will be the daily wage rate, that is 893.33. Okay, so here we'll take now 893.33 multiplied by 26 multiplied by 12. So 900 multiplied by 893.33 multiplied by 26 multiplied by 12 divided by 1 lakh, that comes to 2508.5. 2508.5. So what will be your total labor cost here? What will be your total labor cost? We'll take here total labor cost. Right? So that will come to 50122.8 and here it will be 53824.7. Okay, fine. So we have discussed about the material cost. We have discussed about the labor cost. We have calculated the sales, right? What we are doing, even we don't know. The only thing is whatever the information is given, we are just interpreting it and we are just writing it down. That's it, right? Next part. Power cost. Power cost for the year 2021 is 42 lakhs. Is 42 lakhs. Right? Say change it to here 2023. There is a misprint here. for 7 lakh units. 1 unit is equal to 1 kilowatt hours. So you have paid 42 lakhs for 7 lakh units. Okay. Now they say 60% of the power is used for production purpose, that is directly related to the production volume. What does it mean here? What does it mean here? What will be the implication? They say 60% of the power cost is related to production. And it is directly related to what? It is directly related to your sales volume, quantity. Right? And here what we are saying, in the very first line they are saying the sales volume is increasing by 12%. Now if the sales volume is increasing by 12%, will your power cost increase by 12%? Yes sir. Clear? This is the implication here. Just try to read the implications. See, that is the most important thing, how you interpret it. If you start interpreting the question in the right way, that what is given, what is the meaning, what is the interpretation, and that will come with the practice, right? So practice is the key. So there 60% is related to production and the remaining are for the employee quarters and administrative offices. That will remain constant, no sir. That will remain constant, isn't it? Okay. So let's see here what is related to the power cost now. Let's see something related to the power cost, right? Now I'll take power cost. Okay, let's see. The power cost again is divided into two parts. First, I'll take what is the number of units for production. For production, what is the number of units? That is 60% of 7 lakhs, right? That is 4,20,000. Next year, because they are related to production, if the production is increasing by 12%, the volume quantity is increasing by 12%, this will also increase by 12%, right? So this will be 4,70,400. This will be 4,70,400. I am talking about the units as of now, not the cost. Clear? And what about the admin? The remaining is for the admin, that is 2,80,000. It will remain same in the next year also. 2,80,000. It's not going to change, right? So this will give you total power consumption. This will give you total power consumption. So total power consumption is, here it is 7 lakh as we know, right? And here it is 4,70,400 plus 2,80,000, that comes to 7,50,400, right? This is the number of units of power consumption. Now I'll multiply it with the rate. Can you tell me the power rate? Can you tell me the rate? Per unit rate. Very easy, sir. How will you calculate the per unit rate here? Per unit rate, you have paid 42 lakh rupees for how many units? For 7 lakh units. That means what is the per unit rate? That is 6 rupees. So you will multiply here the consumption with the rate. The rate is 6 rupees and 6 rupees. So this will give you your power cost in rupee terms. Right, so it is 42 lakhs. I'm going to write here 42. Why? Because we are taking all the rupees in lakhs. So 7,50,400 multiplied by 6 divided by 1 lakh, that comes to 45.024. So power cost calculated, sir. Done. Next, during the year 2023, the company has paid 60 lakh for the safety and maintenance works. The amount will increase in proportion to the volume of production. That means this amount will also increase by 12%. Volume is increasing by 12%. This amount will also increase by 12%. Simple, straightforward, right? Safety and maintenance cost. So next we'll take here what? Next we'll take safety cost. Safety cost. Safety cost. In the first year it is 60 lakhs and plus 12%, it will be 67.2. Simple, straightforward question. Next one. Okay, so we are done with this. We are nearing the end very soon. During the year 2023, the company has paid 1,20,000 for the purchase of diesel to be used in the cars hired for administrative purposes. The cost of diesel will increase by 15% in the year 2024. Okay, sir. Diesel 1,20,000. It will increase by 15%. No issues. Next point also is related to the cars, so I'm going to read it. During the year 2023, the company has paid 6 lakhs for the car hire charges excluding the fuel cost. Fuel cost is 1,20,000. Besides that, 6 lakh is paid as a rent for hiring the cars. In 2024, the company has decided to reimburse the diesel cost to the car rental company. Okay, the company has decided that okay, we'll pay diesel cost also, we'll pay the car rental also, and doing this will attract 5% GST on the reverse charge mechanism, on which the company will not get GST input credit. What the company is saying, listen to it very carefully. In the last year, what they were doing is, in the last year, they were paying diesel, right, from their own pocket, right, not to the company, but for their own pocket, they were paying directly the diesel, right, and they were paying the car hire charges, that is 1.2 and 6 rupees. Okay, let's see what is the cost related to cost of cars. So I'll write here cost of cars. If we talk about the year 2023, what is the cost related? One is the diesel cost that the company is directly paying. The company is not paying to the hire company from whom they are taking the cars. No, the company is directly paying the diesel cost, right? That is 1.2. And secondly, higher charges are being paid, that is 6 rupees, right? Now next year what they say is diesel cost will increase by 15%. So 1.2 plus 15%, that will be 1.38. This is going to increase by 15%, so it will be 1.38. Higher charges will remain same, that is 6. But in this year what is happening is the company will have to pay GST on the reverse charge mechanism, because now the company is paying diesel charges as well as higher charges to that company. Which company? From whom they are taking the cars on hire. So here we will have to take the GST also. No input credit available. If no input credit is available, that means this will form the part of your cost, because cost is what? Any cost, cost is what? Any expense which is done from your pocket and it is not going to come back to your pocket. Very simple thing, right? So here what will be the GST? It will be 5% of what? 5% of 6 plus 1.38 of the total cost. So 7.38, 5% of that comes to 0.369, right? So this will be the total cost of the cars, that will come to 7.2, and here it will be 7.749. This will be the total cost of the cars, right? This is a very important point regarding GST. Now next, depreciation on the fixed asset for the year is 80,40,000 and it will be 15% lower in 2024. Please be very careful with the words, because till now whatever we were doing, 15% higher, 12% higher, 12% increase, 15% increase, but here saying 15% lower. So please do not flow with go with the momentum, right? Please read the words very carefully, because one mistake means you are losing out on the marks, and this is a fight for each and every one mark. Mark my word, for every 1 mark. Because ask a student who is losing on the aggregate by 1 mark, ask a student who is getting 39 in one subject and because of that not able to clear the group. So it's a fight for every 1 mark. Take it very seriously, right? So here depreciation will be 80 crores 40 lakhs, sorry. So here we'll take the depreciation cost. Here where we are going to take depreciation cost of 8040 minus 15%, that will be 6834. Now what you will do is, now can you find out, we are done with all the points. No, we are done with all the points. Okay, let's see first the MCQ. What will be the sales volume for the financial year 2024? Very first point, sales volume, that is 470, 400. Sales volume, no? They're asking for the sales volume. Yes, 470, 400, option A, done. What would be the quantity of the raw material in the financial year 2024? Quantity of raw material, sir, that is 10,81,920. So 10,81,920, that is option D for us, right? what would be the car hire charges for the financial year 2023? Please tell me the car hire charges for the financial year 2023. Read the words very carefully. I'm saying what? Car hire charges in the financial year 2023. What are the higher charges? Higher charges, higher charges. 6 lakhs. Please do not commit a mistake here, right? So it will be 6 lakhs. What would be the car hire charges for the financial year 2024? Now here you will have to smart. You have to be smart. Why, sir? Because in the financial year 2024, if you are taking the car on the hire, what are the charges you are paying? You are paying 1.38 for the diesel to that company. You are paying 6 rupees as the higher charges. You are paying 0.369 as the GST. So this will be the total cost of hiring in the financial year 2024. In 23, the charges were 6 only because 1.2 was not paid to that higher charge company. 1.2 was directly the diesel was filled in the car straight away. Clear? So you have to understand the interpretation very carefully. So here the option will be option 2. What would be the budgeted profit or loss for the year 2024? Budgeted profit and loss means what now? This sales minus all the cost. All the cost means this material cost, right? This labor cost, this labor cost, this power cost, this safety and maintenance cost, this cost, this cost. So finally, what you will get here is your profit or loss, right? From here, what you will get here is your profit or loss. So in the year 2023, you will get a loss of 5142. In the next year, you will get a loss of 1273.073. In both the years, it is a loss, right? So it is option D. It is a loss of 1273.07, 043073. That is because of decimals. That's totally fine, right? No issues. So this was the working. Sir, why you started with the working and why didn't you first read the complete question? See, from the very initial part of the question, I got to know they are asking for what? They are asking for the revenue budget. Revenue budget means sales minus all the cost. So whatever the information I kept on getting, I tried to interpret and write that information. That's it. Right? I did nothing. And automatically from that information, I got the profit and loss. That is the revenue, the final revenue. Clear with this? Don't worry, you will get to understand how to solve it and how to interpret it slowly with the practice. With the practice, you will keep on understanding that particular thing, right? So with this, a very important part is done. That is budgetary control case study. Next will be the last one, that is service costing, right? So we are done with the case study of budgetary control.